Okay. Is there something here you want to say about cumulative translation adjustments, CTA? Don't a number of questions come up, and isn't it in this area that the trouble is? CTA actually a real account or only a report only thing? What is that?
That's great. Yeah, totally. So coming back to this table here, and the fundamental concept of this, which is that different accounts are going to be translated at different rates. Now, if you think about how a trial balance works, the debits have to equal credits, and yet different accounts are valued differently. So if different accounts are valued differently, there has to be an offset somewhere to express that discrepancy, essentially. And so what NetSuite does is it will express that via cumulative translation adjustment. That's the standard accounting policies around that, I guess. That's how it's intended to work. So that doesn't indicate a problem. Having a CTA balance doesn't mean you did something wrong. It's simply a function of the fact that for simplicity, let's call them assets. My assets are valued one way, and my equity is valued a different way. Well, something's got to be a plug there to kind of express the fact that I don't have as much equity as I put in as my assets are being valued at, or I have maybe more equity than it seems. I invested a certain amount and produced a certain amount of equity via my P&L, my general business functions, but there's more here because my assets are actually valued higher based on this translation. I have to express that somewhere, given just the fundamental accounting formulas. So the way that that's expressed is in CTA. The technical classification of that is actually in other comprehensive income, OCI. That's where it kind of sits in an expanded P&L, but which is somewhere in between the P&L and equity, right? Not to get into that whole area of what the definition of that account type is, but essentially it's got to hit your equity because your primary balance sheet accounts are valued one way, and your P&L activity and your equity activity is valued a different way. So you've got to kind of produce that to say, well, here's why my other accounts, my current accounts, are valued up or down with a different rate, right?
Makes sense. May I ask a question here? So this again is not a real general ledger account. It's a report only concept.
That's correct.
And
that's right.
And NetSuite wants to put it as an expression in its equity domain. Thus, it would be showing up on the balance sheet reports, not necessarily a P&L account report. Is that fair?
It's run in real time, exactly, because NetSuite's looking up these rates when you run the report. So it's a function of the report. It's not a GL account in terms you won't see a transaction posting for this effect. Just as much as I won't see a transaction posting for my changes in these rates month to month. It's just when I run the report, it puts on that lens, it looks up these tables and produces the amounts for consolidation.
But naturally, the reports support a level of drill down. So if I drill down on the CTA account, what does it reveal?
What's interesting in NetSuite, when you try to drill down, it won't show a list of transactions in CTA. It will take you to a report. That's a pretty useful report. Once you understand what it's doing, that's your CTA balance audit report. I believe it takes you to this page for the period in question. You can kind of see the contributions of each GL account to that balance. So you can kind of observe it.
So it does explain it then.
It does explain that. Yes. And so it shows you the starting position, what posted in the period, what's the ending balance, and what's that sort of contribution to CTA, if you will.
Okay, so that is answered by the CTA balance audit report.
Yes. But what isn't answered often is when I'm looking at a balance sheet and I'm running a consolidated balance sheet, so it's expressed in my parent subsidiary's currency, and I'm looking at any given month, and then I drill down on that GL account, and that shows me the activity in the account as you'd expect. And then I kind of want to expand that activity, or even if I just look at 1 month, doesn't matter. Let's just take 1 month of activity. What causes confusion is that my beginning balance right here, expressed in USD, won't tie out to my ending balance of the prior period, expressed in USD, for accounts that use the current rate type. So the reason for that is because the current rate type accounts are translated, the entire balance is translated. So it's always inception to date. So all activity, essentially, whatever comprised that balance, is translated at my new rate at February, including my beginning balance, right? So the beginning balance will absolutely not tie to the ending balance of the prior period when I look at it in from a consolidated lens.
I suspect it confuses people.
It certainly does. And so, often we'll get a question, this doesn't make any sense to me. The most fundamental thing is my beginning balance should tie to my ending balance. And another way of expressing that question is, show me the transaction that booked this. Because even when you start to explain, well, it's current rate type and it's taking inception to date. Okay, but where are those transactions? I don't see them posting anywhere. And that all comes back to your point earlier about CTA and all of these rates, really, the entire consolidated rate function in NetSuite is it's not posting transactions. It's just looking up the rates when you run the report. And so the numbers are going to be different. Again, when I look at it from a consolidated reporting angle, that ending balance won't tie to the beginning balance. And there again, the auditors will come in and say, well, you need to show me what this was. And so clients might be in spreadsheets, even when they do understand it, they can produce it in spreadsheets and show them how it moved from month to month. And any decent auditor will understand this. This is a pretty standard concept when it comes to consolidating multi-currency entities. So the concept is not difficult, but sometimes just the ability to produce a report that explains it in a clear way is sometimes difficult.
Okay. And so what is there some way to see is there a different way to kind of understand why that opening balance is not what we expected it to be, which was last period's ending balance?
Sure, indeed. And so another report that I've created for a client was basically a query that shows GL activity, GL movement. And I create rows that show the movement in consolidated currency based on what I know NetSuite is doing in the background each month to revalue it. So not revalue, bad choice of words, but to translate the source currency into a consolidated currency. So I produce these sort of artificial rows. They're artificial in the sense that NetSuite's doing it in its reporting engine, but it's not actually posting to the ledger. So I produce those rows that can show that. So, just imagine if you would see this and you may see beginning balance of whatever that ending balance used to be, and then a row that gets you that shows the delta between the prior month's ending balance and the current month's sort of beginning balance.
So it could it would allow for telling the story of what was the rate at that point in time and help you see here's the differences. So it kind of isolates it out versus what NetSuite's doing is taking February 2025, which is the period in question, taking its current rate, going all the way back, which could be 20 years.
Yep.
And just applying the current rate against every transaction in there, which we know that isn't the reality, but it's a function of the way the report does this on balance sheet current rate accounts.
Exactly.
And really, current rate accounts are only on the balance sheet. You don't see these on the income statement accounts.
No, that would typically be balance sheet. At most asset accounts, liability accounts. Yeah.
Okay. So that's like another report that you've crafted that is available in that query renderer tool.
Yep, I've created in the same tool, and it's got some good filters in there because you have to, again, what period am I running the report on to produce the right rates to do those lookups, right? So there are some parameters that need to be put into the report when you run it. And what that really means is if you would have just a flat query and you want to use the SQL tool, you could do it, but you'd have to know where to put those parameters in, how to express them and all of that. So,
okay. May I ask a different question then? If we go back to let's go back to your exchange rate table.
The consolidated rates or the standard?
Yes, the consolidated exchange. So the nice part about this table is I can see NetSuite. It appears to me the current row can be calculated by NetSuite's currency rates that are in the environment.
Mm-hmm.
The average and historical uses actually the transactions to determine its weights.
Yes. Mm-hmm.
Okay, but what happens in some environments where we're not all on one world? Meaning we like the consolidated engine, but we're using an outside ledger system, and let's pretend we see this often. That subsidiary sends over their trial balance at the end of the period to report to parent or to corporate their results. Now NetSuite doesn't have these transactions. What do you do? How would you come up with average or historical?
Yeah, it is difficult. Well, it really depends on, I would say, how frequently they bring in the trial balances, but more so what method the other system is using to produce their consolidation. So if the other system is using a delta approach for the average and historical, the same way that NetSuite does, and it uses inception to date for current, the same way that NetSuite does, then the actual math of how that system gets the weights and how that system produces its currency, the actual rates, that's not a big deal. You can edit these rates and plug in the rates that you need to produce the identical reporting. The bigger challenge is where the other system does not value each month's activity by that month's weighted average rate, but rather it may also be using some sort of inception to date.
Well, I mean it in the following way. If I had, let's suppose, in your case here, I have that European subsidiary, and they're not on NetSuite. So at the end of the month, they're just operating in their local functional currency. At the end of the period, they produce a trial balance. There's no concept of foreign currency to them. It's all just euro.
Okay.
And do the trial balance. It foots. Okay. But they're like, all I'm looking at is the summary numbers at the end, which represents the activity, or the summary of the activity for that period, and says, here you go, Mayor. Thank you. Now we don't see anything. So what happens there?
Okay. So in other words, they aren't consolidating in any way in the other system. They want NetSuite to be, okay. Well, ultimately they'd have to come up with an average rate based on something. What we could do is run the detail out of the other system, look up the rates in NetSuite using the table, and essentially outside of NetSuite produce our own rate that we want to use. Because short of actually importing every day's activity, right, which could be done, right, but you want to just import a 1 day flat trial balance, then you'd have to produce a calculation outside of NetSuite that provides an average rate, and then you'd be editing this table and plugging in that number.
But so at the end of the day, a corporate controller who's at the parent would ask its controller in the sub to say, thank you for that trial balance. I need all the detailed transactions so I can determine my average and my historical rate, because I need some basis for the calculation. They effectively have to build that information, likely in spreadsheets or something, to come up. And then one has to come into these tables and put in the values, because NetSuite's ignorant. It won't know.
That's right. That's exactly right.
Okay. I imagine then when you calculate and you don't have anything in there, you'll see always the current rate, because there's no.
Exactly.
Okay. Let me ask a different question. We have found that when you are helping customers in their cutovers to get onto NetSuite, that they have maybe expressed their financial statements in the past with a particular way, and now they're trying to cut over and get into NetSuite. And what they really would like is to be able to have NetSuite report the way they reported in the previous world, but they also now are going forward with NetSuite. What concerns come up, and what have you observed?
Yeah, that this is a classic problem. And again, the problem is really, I would say, intensified or significant when the approach used in the other system is a different approach. Or stated differently, if they're bringing in just at cutover a starting position trial balance, that trial balance is the accumulation of many years of activity, right? And the translation that the other system did, the way they produced their consolidation, is going to be sensitive to the different rates that have been occurring throughout that company's history, especially for average and historical, if they are doing something similar where it's each month's activity measured by that month's exchange rate. So what happens is what you find is there is no one rate that I can put into a table for that starting trial balance that's going to result in the consistent, correct, consolidated values in every account, right? Because let's say we're bringing in a year-to-date P&L. And so there's the January numbers, the February numbers, and the March numbers. We're just bringing it in March, just the whole quarter all at once in one big trial balance. You may have an account that had activity in January and no activity in February, and vice versa. So the actual way that the other system consolidated would have been sensitive to each month's rates. And yet in NetSuite, if we're just going to bring it in as one big trial balance, we only have one shot at a rate to give it one rate to use across everything we're bringing in. You just picked it as massive journal entry. It's just one journal entry. It's just balances. And you just have one shot at a rate to convert it. It is actually mathematically impossible to do this if that's all you're doing, to get the different numbers, the different consolidated numbers in each account that it needs for your trial balance. So the techniques basically are, and I'm kind of expressing it in this diagram. I'm kind of pointing it out here. We have no control over the translated consolidated amounts directly. So I can't plug a number in the consolidated currency without upsetting the local currency. My entry point into NetSuite's algorithm or NetSuite's GL is really at a transaction level. So I have to start at almost the granular level of a transaction and figure out how is this going to be expressed in my consolidated currency, right? But the only the only direct control I have is over the actual numbers that are sitting in the Euro ledger. I have some control here. I have the most control here. I have some control here, and I have no control here. In other words, this is simply a function of working my way backwards. What NetSuite has done, looking up these rates to the numbers in my ledger. So just that awareness helps open my mind. Okay, how do I have to solve this? I know I can't directly manipulate these numbers. I can manipulate these at some level, but again, it's just one shot for each currency, for each rate type. And I have the most control over what I put into the actual Euro ledger. Okay, so what I need to do is I need to actually work my way backwards. I start with the consolidated numbers, and I ask myself, knowing what the rates are, what do I need my Euro numbers to be in order to produce that? So my initial calculation, I ignore what the actual base currency ledger looks like, and I start with my consolidated ledger. And I say, what is the consolidated currency amounts? And then I work backwards and I produce, okay, well, if I have to produce $100 USD, what Euro amount would I need to put in the ledger to produce that given my rates? Okay. And I can calculate it. I mean, I can create my own rate. Like I said, I can plug a rate, but I only get one rate. So I might do a weighted average for the trial balance that I have. And then I work backwards and I say, what Euro amount do I need to put in to get to this USD number? Okay. That's like step one. Then what I need to do is I need to say, okay, well, I'm going to do that. And then I can produce my consolidated numbers that are satisfactory. So I can run the consolidated numbers and I can see, yep, this now ties to what I was provided with in the consolidated currency. What will happen though is if I now run the report in the local currency, my numbers will be wrong. I know that going in that these numbers are not going to be correct expressed in the base currency, in the functional currency, because I have to start here and do the math backwards to be able to input numbers that are going to tie out to the consolidated currency. Now what I need to do is I need to find a way of plugging the numbers in my base currency so that they tie up in the local currency without upsetting what I've done on the consolidated side, right? Because the minute I put a transaction in here, that's going to be expressed here, right? So
I don't know how you do it. I speculate you need another sibling subsidiary.
There's two approaches. One is another shell subsidiary, like another elimination subsidiary that I manually put things in, and then I kind of group it. I don't like that method because it's messy, because now you've got another subsidiary that's doesn't really belong there. It's just there for the adjustments. But what you can do is, if you can go back one period, if the client is okay with going back to, if cutover is January, they may not care about December. They may not care about, you can go back as far as you want. You take another period that you sort of don't need in the system.
Okay.
And you can set those rates to 0. You can set the consolidated rates to 0, which go near. Okay. So what that means, now I have a way of bringing numbers in only impacting the base currency, not impacting the consolidated numbers. The reason I know that is because if I set this to 0, when NetSuite does its math and it's in report time,
No impact.
it's 0. What's that?
It has no impact.
It has no impact in the consolidated numbers. It only has an impact in the local books.
Wow.
So I take a prior period that I don't need and I set the rates to 0, so I know my consolidated reporting is going to be stable. And then I bring those numbers in, only, not numbers, but the adjustment numbers, only in the local currency. And then I'm able to get my local ledger back up to where it needs to be. And I already have the numbers in when I initially did the trial balance, right? When I did it based on the consolidated numbers working backwards, I already know that my consolidated numbers are stable. And then, of course, you close up the period, lock it up, do restrictions to prevent anyone from ever touching it.
That makes a lot of sense. And so, I mean, you could, when you book that transaction, you could put something in the memo or description that helps somebody understand why you're doing such a thing, because it's a phantom transaction trying to make it plug. And
exactly.
Okay, I think I understand it. Well, I don't have to see it, but I think I understand the mechanics of what you do. In my mind, that's a puzzle. Every puzzle looks different depending on the client's cutover and what they need to do. Isn't this part of the criteria you're using for the kind of people you want on your team? Tell me about the kind of people that are able to solve these puzzles.
Totally. Yes. I think the first quality that I'm looking for, that we're looking for at Prolecto, is curiosity. Is client comes with a problem. Yep. I see that it's hard to get this, but I know NetSuite's doing something under the hood. What is it doing? Right. And so I wanted someone who has the curiosity and who wants to do the trial and error, try to figure this out. Of course, using all the tools at our disposal with the suite answers and help, but often this is a little bit vague in the standard NetSuite material. And you got to go out a little bit and you got to think, how might it do it? Right. And you got to do some trial and error. And like I mentioned, you want to talk to the teammates and figure this out. But in terms of the qualities, yes. So the curiosity, the ability to think critically and to understand these distinctions between concepts that seem like they're overlapping, but they aren't, right? Just that discovery that NetSuite's, in terms of the average rate, that it's not using debit and credit, netting out the way you'd think it might. It's actually using the absolute value of those, irrespective of its debit or credit. That was a discovery that I don't remember where I saw that or how I came across that, but the person who has the curiosity and persistence to keep at it and keep thinking about this different ways. Well, how could this work? Or the problem solving of this little puzzle, right? Just understanding fundamentally, take a step back. Okay, I have no control over this. I have some control here. I have most control over here. Okay, now how can I do this where I keep everything stable and get it to the result I need? So the, I guess, mental acuity or agility in their minds to think a certain way and parse out a complex puzzle and understand the pieces of it, and then be able to put it back together and ultimately reproduce what NetSuite's doing, right? Just to get out of the standard native things and be creative about this. And none of this is like, I would say, cavalier or like cowboy-esque, where we're doing something that's really risky in any way, right? It's all using the native tools, but we're able to find a way to make it pliable enough for what we need it to do, right? And so I guess someone who has the ability to want to be creative in a way and want to think, okay, how can I solve this in a maybe not non-traditional way where it's not so linear, not as obvious, and yet can really fit into the tool.
Right, exactly. That, like, even how you discuss the challenge there, it's in the sense that the common sense things are just the most common sense things we see clients do is they use journal entries to fix things. Okay, and this is deeper than that. This requires an understanding of, yes, accounting, debits and credits, and how that works and impacts. But it sounds like it's also an understanding of, at some level, relational databases and computer science to understand how databases roll up information and summarize, and then to understand that how those algorithms run, and then to creatively think about how to produce the impacts that you need so that the tools just do their thing. And it may not be, it's almost the intersection of accounting understanding and the computer science understanding that allows for the mind to see the space you have to go in. Like what you just said, I'm going to create the consolidated exchange rate to be 0, produces no impact then on the reports you're seeing. But then when I go down and look at them at the ledger level, it helps to tie things out to what they expect when they look at it from that point of view. That couldn't see that, then that would not be obvious what to do there at all.
Exactly. Right. So it's a technique, and the computer science aspect of it, what the tables are doing, knowing that if it's a computer, which it is, right, it's software, it must be consistent and repeatable. So there must be a logic that I can reproduce. I just need to crack the nut. Like, what is that logic? And I know it's going to be consistent. It's not someone just on a spreadsheet with a human brain. So understanding that it's got to be square in a certain way. It's got to fit somehow. Even without knowing what it is yet, knows that means that there is a path here. I just have to find it.
Right. That makes sense.
Yeah.
So the kind of people you have on your team have that curiosity and the tenacity and that background, and they will roll up their sleeves and they'll go after it.
Yeah.
They'll go after it. Okay, great. So, okay, this is great. Are there other things that you would want to share about that, this was a great talk?
Often this spills over into the elimination conversation where you have subsidiaries where you're consolidating, you need to eliminate, and currency has a role to play there as well. And there's another CTA account called CTA-ELIM, which is yet a whole other area that we can flesh out and produce reporting on and understanding what NetSuite's doing there, because that is another area where it's like a black box. What is NetSuite doing when it's eliminating? Why are there things showing up in CTA-ELIM? These are there's many other questions that we can, explore if we wanted to. But I think for now, this is a nice little discrete set.
Okay, great. Okay, I think that this was a good conversation. Thank you, Mayor. I can produce something out of this to help the community understand better.
We hope you found these insights helpful. If you're ready to get more out of your NetSuite investment and unlock untapped potential in your business, start your journey with Prolecto. Contact us today.